Titan is the other one that we're looking at this morning. They're going to talk about their Q3 earnings. The revenues came in line with street estimates, but their gross and EBITDA margins both contracted year on year. Ashok Sonthalia, the CFO of Titan, joins us now to talk about that. Mr. Sonthalia, good morning. And as always, it's really nice to speak to you on CNBC-TV18. First we'll talk about the slightly troublesome areas, right? And then we'll go to the growth areas. It's the margin contraction which is worrying the street a little bit. Can you tell us what are the challenges that you're facing right now? And what do you see as the trajectory on the operational performance over the next, say, 12 to 18 months?
So, good morning, Sonia. We were quite happy and satisfied with the growth performance. While market was turbulent, gold prices were volatile during Q3, but still we could deliver robust growth numbers in jewelry and elsewhere, watches also. On margin side, of course, there was one region in jewelry particularly was that studded ratio was lower compared to last year. And there we saw some softness on the very high value solitaires and the sub 50K or sub 100K kind of diamond jewelry market. Q4 is an activation period for us, and we will wait to see the results of how Q4 pans out as far as studded jewelry is concerned. Watches, of course, wearable is doing pretty well. That's driving growth at this point of time. And that's slightly lower margin business in the watches portfolio. And we spent a lot in the marketing across our segments, particularly in jewelry and watches, to kind of not only position some of the new part of the lines, but of course, to kind of tackle the competitive intensity as well. Yeah.
Right. Mr. Sonthalia, good morning. Prashant here. This is not the very high value sort of segment which is seen as lower. This has got nothing to do with the artificial diamond bit picking up, right? I mean, you think that perhaps could have some impact?
We would not like to conclude that way. In India, particularly, while in US market we have seen a little bit, but I think it's still two distinct propositions, and we will have to wait and watch how does it pan out. But we will not attribute softness in diamond to kind of LGT at this point of time.
But it's possible, right? Because very high value, very high priced, as you said, in that segment.
It's
difficult to quantify. Sorry, go on.
Let me just correct, Prashant. So we saw the softness in the low value diamond segment, and in high value, only solitaire I'm talking about.
Okay.
Actually, we also took some price correction because diamond prices have come down. But diamond prices came down globally because of the inventory overhang, a little bit whether lab-grown diamond has contributed to this. These are all things to be established. I don't think any one of us have a very, very clear handle on that.
Got it. Okay, so you're saying that in the watches segment as well as in the high value diamond business, there's been a little bit of softness. Watches also because, of the higher share of smart watches, right? So overall, what do you see as the margin trajectory for the full year? I think earlier you had spoken about margins between 11 to 12% for FY24. Are you holding on to that? Do you think you could slip below the 11% mark as well? And for FY25, what are you guiding on margins?
So, if I remember correctly, the watches 9-month margin is so Q4. Of course, the 11 to 12 may have some minor slippage, but if you talk about next 2 years kind of thing, we definitely believe we will go back towards 13 to 14% and even try to improve from there. Because analog watch portfolio is also doing pretty well for us, and where margins are pretty stable and good. And the premiumization journey in analog watch is shaping up very well, and we are investing a lot more preparation and investment is going on to even upgrade further premiumization, which is right now getting into cost, but the value and benefit will be coming in the coming quarters. So we definitely believe that watches business will go towards 13 to 14% kind of margin profile.
Okay, all right. Hi, good morning, Mr. Sonthalia. Nigel on this side. So I had a two-part question. Some of these newly listed companies, their CAGR on a 2-year basis has been much better than yours. So what is your updated market share? Are you holding on to the market? Point number one. And on the studded part of your business, it's at around 24, 25%, or earlier it used to be more than 30%. Do you gradually seeing that move up? I know quarter four is better than quarter three. So how do you see the trajectory out there?
Of course, Nigel, competitive intensity is high because of some of the newcomers coming in at the sub price band of 100 to 50,000, where many new players, startup kind of things, activities are there, and the established player who have got money or who want to get money, they are kind of expanding their network at a fast pace. And when you expand your network at a very fast pace, and some of the inventory push in that also gives you a growth rate. While we believe catchment to catchment, most of the places either we are holding on to our market share, or in some catchment we are still improving. That's the sense we have. And as far as the competitive activity is that, it of course make us sharpen our game, but it doesn't worry us.
Mr. Sonthalia, two questions. One, for the overall business, as you said, fourth quarter is the activation period. It's early, but what are the trends you've seen so far? Is it looking good? And at this stage, if you can look into FY25 and tell us what kind of growth should we expect, what kind of margins overall for the business should we expect?
Prashant, January has done well compared to in quarter three, where we saw December was slightly softer for various categories, and particularly jewelry. Gold prices all of a sudden again went up, and quarter on quarter, if you look at, almost 16% gold prices have gone up, and that is where some customer hesitancy we saw in December month. But I think January customers are returning and the start is good. We need to see that it holds on for the whole quarter. What we have seen a little bit change, that there are other things also catching up a lot, particularly the experience segment, where travel, hospitality, high-end SUV, cars, etc. So I think people are traveling a lot. So when the festive or regions come, they come back and they make purchase, and we have seen very, very good growth in festive season. And then again, we are seeing in January, but it is not a very steady state that, you have a continuous steady state growth every week, every day, or every month. And that is where we need to then maximize when customers have highest intent to purchase the categories where we are. And that is where the ad spends, etc., are kind of done aggressively at that point of time. I believe FY25, we have given FY27 guidance for 2.5x of jewelry. For the first 21 months, we are ahead of the required CAGR, and that gives us confidence that FY27 guidance for jewelry of 2.5x top line holds.
Okay. You now own CaratLane entirely. Will you be looking to merge that with the standalone entity?
No, there is no immediate plan to merge that entity. That now the new leadership, and not new leadership, the same, Avnish has become managing director and the same old folks. But yeah, there is a transition involved, which has happened. I can only say they will continue to function as a separate organization, a separate team managed by a separate board, but more support and more knowledge sharing between the two companies are happening, and which is good and healthy for both the companies.
Okay, so you don't have any plans to merge that entity with your standalone business. Got it, at least as of now.
No, not right now, yeah.
Understood. And any kind of expansion that you're looking at overseas? Anything that you would be interested in? And if yes, within which segment?
Sorry, your voice got dropped in between. If you can repeat.
Overseas contribution, sir. What is it now? Where is it headed?
The CaratLane?
Overseas business, sir. Overseas business as a percentage of your total business as of now. How much is it, and where is that headed?
As we speak, we have 14 stores across GCC and US. This business has been doubling, of the last 3 years, and we expect it to continue to keep that pace. We are getting very, very positive response wherever we have kind of opened our stores or wherever we have done our trunk shows. So US will continue to grow. We today have 4 stores, and I believe in next financial year we will add at least 4 or 5 more. GCC, we have about GCC, Singapore, and Qatar. We have about 10 stores, and they will also go to 20. So next year, from 14 to 25 to 30 stores internationally, shaping up very, very well. And now we are looking at even eye care. We had 1 store which did very well for last 4 or 5 months. And now another 3 or 4 stores are coming in GCC, Dubai area particularly. And depending on these 4 or 5 pilot stores, we will plan to add more in that region.
All right, Mr. Sonthalia, we wish you all the best of luck. Thank you very much for joining us and answering all those questions patiently. Thank you for being with us here.